The exploding silver supply deficit. Hi, I'm David Jensen, and this is a silver market, a short silver market update for August the 20th, 2022. First of all, if you like this video, please give it a thumbs up. It's very valuable in terms of the ranking on the various video platforms. I also post this information on Substack at jensendavid.substack.com. On Gab, I'm David Jensen with no space. On Getter, I'm Jensen David with no space. And on Telegram, I'm global_political_events. You can find me there as well. So what prompted this video was a Reuters article last week, August 17, 2022, saying there had been a sudden, strong increase in silver demand from India. It indicated there was 163 million ounces of additional silver demand from India in the first 7 months of the year versus 3.5 million ounces last year over the same period. So that's an increase of 45 times, a very material impact. And they're heading for 260 million ounces of additional demand in 2022 at that run rate. So in round numbers, to give you a sense of scale, it's the global physical silver market is about 1 billion ounces a year, and this surge of, in round numbers, an estimated 25% in 2022, if it continues, is certainly a very large impact in terms of the demand. So can we see it in the market so far? We haven't seen it in the price. The price has dropped from $26 down to $18. Now it's kind of holding in there at the $20 level, but not what you'd expect to see with price discovery, with proper price discovery when you have shortage. So let's take a look at other indicators. Now, the London silver vaults, they're the most important silver vaults in the world. They hold the largest amount of bullion that's visible. Fully 2/3 of the London holdings are claimed by the ETFs. Now, how much of that the ETFs hold closely and aren't available to market is unclear, but they claim that silver of 2/3 of the total amount that's in the market, in the vaults, pardon me. So the remaining 1/3, we have to keep in mind that only a fragment of that remaining 1/3 is available to market. And we've seen a full 210 million ounce drawdown from, in round numbers, about 1.2 billion ounces at the end of 2021. Down to around 950 million ounces now. So very large drawdown over the last 9 months in London. At the same time that we're seeing this extraordinarily strong pull out of India with this additional 160 million ounce pull into their market. Now, let's look at another indicator, which is the lease rates. This is the implied lease rate, which typically runs 1% or 2% below the actual London lease rate. But the lease rates here show us in 2020 that they dropped very strongly as there was a panic during COVID, and silver got dumped by the traders. But then it recovered back up to the prior levels, and now we're seeing this surge in the lease rate, which occurs at the same time that we're seeing this heavy drawdown in London, which you'd expect to see. Now, the leasing of silver occurs when you're a trader and there's a demand for delivery. The contract which you sold into the market gets called for delivery, and you have to enter the lease market because these bullion banks typically don't hold adequate silver to make deliveries. So you have to borrow it from other sources. And what we're seeing here is this rising level of the lease rate in the market, along with the global shortage which is showing up. And this level goes back to 2009, and thereafter we saw a 5 times move in the silver price. So we're expecting to see a tightening in the trading action in silver, and then a move up as this heavy drawdown in silver and physical silver from the global markets shows itself. Now, the Silver Institute gives a world estimate for the market. Let's take a look at the overall market. Are we seeing it in the deficit? The Reuters article said that the silver demand from India was primarily investment demand. It would show up here at the bar and coin level, and then the other part was industrial demand. So industrial demand shows only a 30 million ounce increase from last year, not very strong in terms of the increase. And the bar and coin demand, which is where the majority of the silver demand would show up. The Indians don't buy exchange traded digital instruments. They buy the bars and coins, and we're seeing basically 278, 279 million ounce demand estimated by the Silver Institute for 2022. So there's been no change there, and the net overall market balance, the deficit in the market is 116 million ounces last year, 21, and in round numbers about 100 million ounces this year. So we're not seeing it there. In terms of the Reuters information, this number here by the end of the year, by the time the smoke clears, should be of the order of 300 million ounces plus, given the strength, the continued strength of the Indian market, as well as silver bullion purchases by high net worth individuals. And also the apes over on Wall Street Silver. There's 208,000 of them there. Go check them out on Reddit. It's a good group of silver investors to follow. But this number here is going to be much, much higher than this 96 million ounce or 100 million ounce deficit that the Silver Institute's telling us about. Now, physical shortage stops paper pricing. The reason I'm saying this is that we saw this in 2016 with palladium. The lease rate started to spike up in London, which is the physical palladium market, the primary one globally. And then after that physical lease rate shot up, the price increased by 5 times over the next few years. The 85 to 90% of the trading in London's market has historically been spot trading, which is immediate ownership. And when you're only trading promissory notes for immediate ownership, you can get into a lot of trouble when there's a physical shortage. So you can't sell those promissory notes into the market and drill the price when you have a physical shortage, because you get the demands for delivery and then you face default if you don't have the metal. Other point here is that the silver exchange as a medium of exchange, a parallel to the coming central bank digital currencies, is an antidote to the subjugation of citizens, which these digital CBDCs provide. Digital ID, social credit scoring, and the CBDCs all work hand in glove. China is the lead on this. The World Economic Forum is working closely with them, as are the cooperators, the politicians who are basically turning their backs on the citizens whom they represent, and are pushing this forward. And so what we see here is that silver exchange, and there's 25 billion ounces of silver above ground, and a substantial amount of that is in the hands of citizens. And as the price spikes from central bank printing, which is the next point, we'll start to see this silver that's in the hands of citizens already start to move and gain value as individuals realize that they have free exchange, and that the silver maintains its price versus the monetary madness that the central bankers and the central planners always show when they get control of money creation. A note here, the fourth point is the refineries are a choke point for the silver, recycled silver to hit the commercial market. The 1,000-ounce bars are what's typically traded on the exchanges, and it has to go through a refinery first, and we're seeing refineries and smelters closing across Europe due to the electricity and energy shortage that they have there. So as this incredible demand is showing up from the physical market, it meets head-on limitation of capacity of these refineries. So net of it all is that there's no quick resolution for this tremendous spike in physical silver demand and the increasing deficit that we're seeing. So I would expect the price to go multiples higher from here as there's a head-on collision between supply and demand, the inadequate supply meeting this incredible surge in demand that's already started and that's going to increase in the time ahead. Okay, that's a quick presentation for you there. Once again, please do smash the like button. That would be great. And I can be found on Substack, Gab, and Getter, as well as Telegram at the following coordinates that are here. Look forward to continuing the conversation.